Hey everybody, it's Wednesday, February 24th, 2021. Let's talk about what's going on here. The Fed is adding fuel to the economic fire, and what we're seeing right now, it is a dumpster fire, and they're only making the fire bigger. It's going to be more debt, it's going to be more market propping. The Fed is buying everything in sight. I wonder if the Fed is going to buy those $10,000 utility bills that we saw in Texas that we reported a few episodes ago. I kind of doubt it. But as far as the markets go, they're going to continue to prop up the markets. Let's take a look at some of Jerome Powell's recent comments in front of the House Committee and the Senate here just recently. And basically, they're talking out of both sides of their mouth. On one side, they're saying the economy is improving. They're pointing to the fake unemployment number, which is the official number that's put out there. But it's fake because it's highly flawed and manipulated and cherry-picked. But even with the improving unemployment picture in their eyes or out of their mouths, which is really not, but even with that, they're saying that they're going to keep the Fed funds rate between 0 and 0.25%. So why are they afraid to raise interest rates if there's a real economic recovery? Right? I think most of you know by now the truth is there is no recovery. It's an illusion. What they're doing is just holding off the crisis. The economic collapse is just being delayed right now, and it's taking bigger and bigger amounts of debt to keep this whole economic scam from imploding. And it will implode. No one knows the exact time, but we do have more time to prepare. Recent article here out of Barron's.com. Home price surge says inflation is real. The Fed clings to the illusion that it isn't. Right? So again, they're talking out of both sides of their mouth. They're saying opposites. They're contradicting themselves. They're saying inflation is not a threat, yet people have to take on ever-increasing amounts of debt in order to keep a roof over their head, in order to buy a home. The Fed has to come in and buy more bonds, buy more mortgage-backed securities in order to keep the lending, right? Because when the lending stops and when debt stops being created and issued, then the ball game comes to an end, and we see the reality that this economy was based on fraudulent money printed out of thin air. It's debt-based. Okay, so speaking of home price inflation, let's take a look at some recent numbers. This is going to be the Case-Shiller Home Price Index. And these were released just recently. Home prices skyrocketed 10.4% in December. And that is the Case-Shiller Home Price Index. And what that index does, it looks at 3-month intervals or quarterly reports on home prices in select cities. So it's going to be a little bit off from other home price indicators, but we see when you look at the index, it's up 10.4%. Fueled by low inventory, we're having a home building crisis right now with the cost of lumber skyrocketing. The ultra low mortgage rates are also adding more fuel to the fire. All right, remember, people said this could never happen when the shutdown recession began last year, when businesses were closing, when unemployment skyrocketed. People said this is impossible for this housing market not to correct. And I've been telling you for years, it is possible. Because why? It's manipulated. It's based on money created out of thin air. It's not based on real labor and real employment. Right? So you can have someone spending more than they make. Let's say a household spends more than they make. They're going further into debt, but yet they can go out and get a home loan and bid up the prices of these homes based on the infinite debt. All right, so when it seems like bubbles can't get bigger, they can get bigger, and that is the risk. Will the Fed push this into hyperinflation and destruction of the currency? It seems like we're headed that direction, but they could pull the plug any moment. So you've got to prepare for the bear, but also you've got to look for opportunities to make money from these markets. We talk about digital assets. We talk about metals here, ways to make money from this madness. Okay, so 10.4% increase in home prices year over year. Now, remember that number. Let's take a look at some other information. And this is the same CNBC article about Jerome Powell's comments. The Fed is buying $80 billion in treasuries each month and $40 billion in mortgages. So what did it say about mortgage-backed securities? Okay, this economy, including this housing market, is juiced. It is pumped up on Fed hopium. Right? And the people investing in this market, they are hoping the Fed is going to continue to support these markets with endless purchases of these securities. And the issuance of debt and these purchases is now going parabolic. And just to sum that up for you, in the past year, we have created 25% of the overall money supply just in the past year, just to keep this illusion alive. So you tell me, what are they waiting for? What are they waiting for just to pull the plug and say enough is enough, no more debt? What are they waiting for? Right? We already have millions upon millions of people that cannot pay their mortgages, they cannot pay their rents, but yet they're saying there's no inflation, there's no problems, and they're going to keep these prices going up with the market propping. CNBC.com. Powell says inflation is still soft, and the Fed is committed to its current policy. So it's going to be more of the same, more fuel to the debt fire. And listen to what he said here. This is a quote from one of his Q&A sessions. Quote, "The pandemic left a significant imprint on inflation, and its price pressures are now a threat." He told that to the Senate Banking Committee. Right, so what imprint on inflation? What inflation is he talking about? Well, obviously he's not talking about deflation. There's not much that has deflated. Certainly the money supply hasn't deflated, if that's your definition of inflation. If you're looking at the cost of living and prices that most people have to pay, there is massive inflation. Food prices, fees, taxes, insurance, keeping a roof over your head, fuel, energy, everything is going up. What is he talking about? But yet these lawmakers that are questioning Powell, they're groveling to him like he is a genius, like he is the savior. Thank you, Mr. Powell, for everything. You're so great. Thank you for saving us. Thank you for saving the economy, right? Right. I couldn't watch the whole thing, but that's basically the gist of how they acted here with this Fed chairman. And it looks to me like they're admitting that even if it looks like the economy is getting better, they're going to keep buying bonds. Bloomberg.com. Powell signals Fed to keep buying bonds even as outlook improves. So when they point to these numbers and they say, oh, look, things are improving, the unemployment rate's dropping, look at the GDP, they're basically admitting, it looks like to me, they're admitting that they know that those are fake indicators. Otherwise, why would they keep buying bonds even as the outlook improves? Right? So the fact that they have to keep buying these bonds, taking on more debt, more propping of this economic sham, that should tell you that they know what's really going on, but they're not allowed to say that, right? If they said it, what would happen? Well, there would be a lot of panic. People would be selling off their assets. The bulls would turn to bears, and it would be basically a self-fulfilling prophecy. So when the chairman goes out there, the Fed chairman, right, his job is not to tell you what's really happening. His job is to keep confidence, keep markets confident that the debt is going to continue, the market propping is going to continue. Now, a word of caution, we are starting to see rising yields. Will those continue, or does the Fed still have complete control over the bond yields? Because remember, the debt market is the big backbone of this entire illusionary economy. So when the collapse finally does get here, when the real crisis hits, obviously the Fed, they're not going to admit that they made a mistake. They're going to find something or someone to blame. Right? So do not mistake the confident words that are coming out of their mouths for reality. Keep preparing. And I want to stress a word of caution. It seems like you could just go all in and no chance of losing money because the markets just continue to rise. Digital assets, the stock market, home prices, people make money on home ETFs now, and you name it. It seems like just put your money in and it's a guaranteed win. But going all in, you make more money if it goes up. But when you're all in, you lose everything when it comes to a stop. So stay balanced, people. Stay prepared. Remember, real assets, food, water, what we saw in Texas should be a warning to a lot of people that having all your money in some digital screen somewhere, while the numbers may be increasing, it is risky. So balance your risk, right? Try to make money, but also prepare food, water, security, self-defense, all that good stuff, right? Thanks, everybody, for watching this report. Stay well, stay safe, stay prepared. We'll talk to you soon. Come back to this channel for more. Bye now. Peace.